Well, from that chart, it looks like it has. But in terms of anecdotal evidence, are banks really lending? We're not seeing evidence of that. We're still seeing banks that they got the bailout, and then they're still contracting. They're contracting, lowering equity loans. They're contracting, lowering credit card limits. So the catalyst we thought was going to happen. No, but I'm saying the catalyst that thought was going to happen with making that hasn't occurred.
But because it can't. Remember, this credit crunch, this is not the problem. This is the consequence of the problem. As a nation, we borrow too much money. We borrowed money to speculate. We borrowed money to consume. The solution is the market tightens up on credit because we've blown all the savings. We need Americans to stop borrowing. We need them to start saving their money. We need to start making stuff and not just consuming things. That's what the market is trying to do. That's why we have to let the recession run its course. We can't try to block it because, you know, what Luskin is talking about, let's do something now intentionally that we know is going to hurt us in the long term just because we think we can get a short-term boost out of it. That's how we got into this mess. We blew up this gigantic bubble in 2001 and 2002 because we didn't want to face a tough recession back then.
Do you have a response to what Peter's saying?
Well, one hates to respond to Peter because one gets threatening letters from his brother. But I will say that I didn't say we should bail out the little three in order to get a short-term boost. I said nothing of the kind. I said that we need to do it to avert a short-term catastrophe. This market, this economy, investor psychology on a global basis has taken enough pain. We're getting to a knockout point where another dose of pain and this whole thing shuts down and doesn't open up again. That's just not worth taking the risk on some kind of moral hazard principle.
Peter,
we tried that through a series of wipeouts with Bear Stearns and AIG and Lehman and Merrill and all
look,
the rest. We are way beyond moral hazard, boys.
But
we're in survival
bailed them all
mode.
out, and look where we are.
Is there a risk in the short run regarding additional loss of jobs? In other words, the argument coming out of Detroit, I mean, you know this argument, and their allies in the Congress is, if we don't help them now and help them restructure, but give them some money, some cash flow money, they'll go into liquidation, and we'll lose 2 to 3 million jobs, and that'll take this recession and throw it into a depression.
Look, it's nonsense.
How do you react to that,
We've
Peter?
been losing automobile jobs for years. I mean, it's a fraction of what it used to be. And I think the only way to get more auto jobs is to have vibrant automobile companies that manufacture and produce at a profit. We're never going to get that if we subsidize them.
The question is, if you let these three companies go bankrupt, are you going to have a sudden, catastrophic downdraft in jobs that have been an orderly unwind for many years, to be sure? But can we stand another catastrophic hit to the stomach here?
What we can't stand is all this government. We can't stand all this inflation, all this money creation, all this government interference in the market. Look, we're going to have to lose a lot of jobs.
What inflation?
We have a phony
Oil's down from 147 to 45. Inflation? Where's inflation? CPI has been negative for the last 3 months. What inflation? Peter, what inflation?
Let me finish my point. Look at the money supply. Look what's happening to prices.
What inflation?
Don, I don't want to talk about that now. I want to finish my point.
You're the one who mentioned it.
No, I want to finish my point that we're going to lose a lot of jobs in this contraction. A lot of service sector jobs have to go away. They're not viable.
I want to come back to the short-term rally in commodity stocks. But, Dr. Bob, I want you to weigh in, again, on a stock market metric. Knowing these guys, you know, in the pits, the institutional investors, if the House vote fails this evening, if it fails to support the bailout, what happens?
It's a big negative for the market.
Risks.
It is a risk, but I'm willing to take the short-term negative risk the stock market gives me tomorrow and next week and next month for the long-term gain. This bailout is the absolute positive wrong thing to do for our stock market.
We're really talking about the future of America here, and we're really talking about the future of free market capitalism.
We can't do it.
I wonder out loud, I'll let you all take a whack at this before we lose this segment. You're going to come back. You know, America is demoralized economically right now. I mean, people read about these bailouts. You see the opinion polls are very much against them. America is demoralized, and that may explain the lack of risk-taking, the lack of animal spirits.
Absolutely.
And the government thinks it's doing good, but the government may be doing bad, because I've never seen a period in American history when government spending and bailing out. I mean, bailing out is not the road to prosperity. My friend Amity Shlaes wrote this great book on why FDR was wrong during the Depression, why Herbert Hoover was wrong. I mean, isn't that so? I don't hear anybody on Wall Street talking in those terms. It's high time they did.
They have to. It's creative destruction. I mean, that's what we need. The industry doesn't work. We never even talked about they have too many makes, too many motors, too many assembly lines. That's why they don't make any money.
You know, Larry,
we have to stop that.
Whenever the government interferes with the free market and they create problems, it's always the market that gets the blame, and they rewrite history Hoover created the Depression by interfering in the market. Roosevelt made it worse. We got out of the Depression despite the New Deal, not because of the New Deal.
Yes.
And they're in the process of creating another Great Depression, but with a lot of inflation.
We're going to take a break. Y'all are going to come back. We can talk more about this if you care to. I want to get into the strategy here because commodity stocks are rising, and there is an inflation-deflation debate. Now, coming up, the Congress, of course, is taking aim at TARP. Some very unhappy congressional campers are blasting the Treasury today. Another attack. CNBC's Hampton Pearson is going to give us the details. I will tell you this, folks. I'm sick of Bailout Nation, and I want to TARP the TARP. I do not want another $350 billion to go to every business in America that's having a little bit of a problem. This is America. This is capitalism. Let us rear up on our hind legs and get back to first principles. We'll be right back.